So today I want to share with you, how I was able to, profit $1,200 in less than 45 minutes trading the E-mini futures. And you can do just the same trading the micros. Now, I'm going to give you a kind of like a cheat sheet or a peek behind the curtain type conversation today, letting you know really how smart money moves. Okay, we're talking about the banks and the institutions because as retail traders, which is you and I, we want to move with them and not against them. So, first and foremost, what you really need to understand is structure of the market. And that really boils down to which way is the market moving. Is it moving up? Is it moving down? You should if you're a beginner trader, someone that's just starting off, higher highs and higher lows, meaning the market's moving higher, okay? And we're looking for beautiful pullbacks or retracements if you trade supply and demand back to an area of demand, vice versa if you're looking to go short at an area of supply. That's really all it boils down to. But you got to get the direction of the market correct, and you have to understand that the market is not always going to move in one trending direction at all times. It could pivot and reverse and start moving in the opposite direction. So yesterday I took 2 scalps, right? That's what I do by trade. I'm a scalper. I'm in and out less than 2 hours and I'm done. I close my charts up. I'm not saying I won't go back and review things or make video content like I'm doing right now, but still, I do not like to engage and spend 8, 9, 10 hours staring at my charts. I mean, that's just ridiculous. Who wants to sit there in front of a computer screen for that amount of time? Because the more you spend engaging or entering into a trade, you're going to either blow your account or incur a lot of loss. Okay, so and a lot of you probably know what I'm talking about because maybe past experience you were taking 5, 6, 7, 8, 9, 10 trades, and that's just way too many. Okay, so I take 1 to 2 trades a day, and that is going to be it for me. Sometimes one and done. Now, yesterday I pretty much scalped a good opportunity going short off of a demand zone directly from my 24 range chart, but I noticed where the market was breaking structure to the downside on my higher base chart just as well. Now, the way I actually trade, which I talk about in so much video content here, if you spend time watching the videos, you can almost educate yourself on the strategy and how I actually, trade myself because it's not complex. You should know by now that confluence is everything. So with me, what I like to do is look at my higher time frame chart. First and foremost, I got to get the structure correct. I must identify which way is the market moving. But I'm also looking at, is the market tapping back into a high probability demand or supply zone? Let me say that again. High probability, not low probability, okay? There's a difference there. And I talk about that in videos on the channel, so please watch the content. Now, I always like to start by marking up my higher time frame chart on a higher time frame chart. I'm sorry, I didn't say that twice, right? And then I'll move down or scale down to a lower base chart to find an entry or zone within that higher time frame zone. So it's basically a higher time frame markup and then a lower time frame markup on the inside of that higher time frame. Okay, that's what I like to classify as multi-chart confluence, and that's using the scale down or top down analysis approach from a higher base chart to a lower base chart. Okay, so with the market like moving to the downside right here, okay, the last few days, excuse me. And then on the 19th, basically, of June, which was a couple of days ago, it started pushing back to the upside. We started breaking structure. Now, these, if you notice right here, this is a major high. All right. So what you have to get correct is which way is it moving. If the market is bullish to the upside and then we get like a reversal coming to the downside, you should know that where your major high and your major low rest at. I'll bring this in. This was a major break of structure to the downside right there. When it broke structure on June the 19th, which was like a half-day trading session. Now, these points right here where I have marked as where these arrows are, these are in between or intermediate areas of structure within the leg right here from this high to this low. Major structure point, high and low, right? So that's why I have these 2 lines, these 2 areas right here, because the market can actually range in between this leg here before it decides which way it wants to continue moving to the upside. But that doesn't mean you cannot take a trade, because each time that the market may break through one of these areas or in between structure points as it's moving higher, you can look for a pullback, say for example, to go long, right? But this will be the turn or the shift in direction once it breaks through one of these intermediate or in between points here where it was bearish. Now we're moving back to the upside. So on Friday's trading session, which was yesterday, I noticed we started coming back to the downside. We took this low out right here, for example, right? So we're breaking structure lower below this red line right here. So that's what I did was I moved down to my lower time frame chart Now the market didn't pull back to a higher time frame supply zone in this case right here, because that's what I was waiting for it to happen, because we started breaking structure lower, breaking below, this area structure right here. When it did that, I moved down to my lower base chart. I'm just going to show you real quick. Let's go to it. Yesterday's trading session right here. This was the last trade that I posted over on the Discord community on this short entry that I took right here. That red line denotes this area where the market broke structure below these lows right here. So all I did was wait for the market to pull back. I looked over at my lower time frame just as well once it broke the higher time frame area structure there, and I noticed that we were bearish to the downside, breaking structure lower, and we had also taken out some lows like right here below this red line. So we were breaking below areas here on the higher time frame structure, but we also broke below areas or lows below on the lower time frame, the 24 range chart. So I just look for an opportunity, say for example, to go short off of my lower time frame back at a supply area here. What is supply? Aggressive selling to the downside. This is a high probability zone as well, because we have an imbalance or gap, attached to this 24 range or lower time frame zone right here. Okay, so I talk about that. If you're not sure where the imbalance or gap is, you can go to the home page. You can use the magnifying glass to search to type in gap or imbalance, and a couple of videos will populate for you to watch. That's where I go into detail about what's the difference, high or low probability, right? Okay, so the breaker structure is what's keen. It's what's really important to me. It's key to the way I trade. When I see the market is, especially if it's on a higher time frame, breaking through an area structure, whether up to the down, either up to the or to the downside, it breaks below this low right here on structure on the higher time frame. Then I'm looking at my lower time frame too to see, okay, is it also breaking structure there on a lower time frame? Yes, it is. So I wait for a pullback, in this case here, to this area of supply right here to go short. I want to trade with the direction of the higher time frame chart in the direction and with the lower time frame chart just as well. So that's why I took this pullback. For example, yesterday I posted over on our Discord, and if you're interested in joining the Discord, it's free. The link is down in the description portion of the video. On this pullback to this key area of supply to actually go short. So that was pretty much the second trade that I actually took in yesterday's trading session. Now, say for example, my first trade that I took, I was looking at to see what the structure had done prior to. We were bullish up until the market had kind of broke through this area right here to the downside. So there was a nice area of demand. It was low probability because there was no gap or imbalance resting back at this zone. But that doesn't mean the market can't react off those zones. I just choose not to want to try to trade them. Especially if I have like a low probability zone on my higher and lower time frame chart. But this was a situation to where we have a low probability, higher time frame zone right here. This was a demand zone, right? But we were also crossing over into right at the boundary of a major round number, 22,000. Okay, and the market reacted off of that area. If I could find it, it was right here. Again, this trade is posted over on the Discord, where I took a shot of it and posted and shared it with the community. But I also did a trade breakdown. I also recorded it in my live recorded trading session yesterday. So if you're an ultra elite member, then I would definitely go over and watch that video content where I'm trading yesterday's trading session and walking you through the setups and talking about them as well. So if you want to become either an elite or an ultra elite member, it's very inexpensive. The link is down in the description. I'll talk about it towards the end of the video, but it's like pennies on the dollar a day, and you get so much added value for doing so. Like the trade breakdowns, it's lots of video content there. You can become an ultra elite member and get the live recorded sessions. So I'll talk about that here shortly. But anyways, this right here was a demand setup off the higher time frame chart. And I noticed that we were also rejecting because we were at, close to right off the 22,000 round number too. So I took a scalp going back to the upside when it rejected, off that round number, okay, and off of that higher time frame 120 range chart. I wasn't taking it directly, okay, saying the market came back into this low probability demand zone right here, because that's what it was, aggressive buying to the upside. But I was looking because I had confluence there, higher time frame zone, and then we also had a level sitting there at 22,000. Okay, so that's the reason why I engaged on this trade here. So let me show you exactly, typically speaking, and that's how I made $1,200 yesterday trading off those two scalps, one short and then one going, the first one going long, the second one going short. Now, let me show you a nice setup of the ones that I really like to see, because typically the market hasn't really been really tapping into any higher time frame, high probability zones. We get maybe a day, sometimes maybe not even any. So I have to rely on taking my trades directly from the 24 range chart with the direction of the higher time frame. So if the higher time frame is bullish, I want to be trading in the bullish direction with it, okay? Because that's going to give me more confluence to want to take the trade, okay? Just makes sense. Now, here's an opportunity here where I want to show you, or an area where I like to classify the multi-chart level experience, in a sense, where you're looking for confluence where you have a higher base and a lower base zone, both of them high probability. That's the kind of trades I like to see, the setups, okay? This is a beautiful area of supply right here. We were pushing to the downside, and then we started pushing back to the upside. Then we came back down and broke below this area structure right here. So this left behind a nice area of supply resting here on my 120 range. So that's the type of trade setup that I like to see, is that when the market is, breaking structure to the downside or the upside, and we have a nice area of demand or supply that the market pulls back to on the higher base chart. So it took out and broke below these lows right here, okay? Breaking, pulling back to a key area of supply, all right? Then what I'll do is I'll move down to my lower base chart. This is the kind of setups that I cover in my video content. If you are an elite or an ultra elite member, the trade breakdowns, the video playlist, the market structure videos, that's what you get for becoming an elite member. An ultra elite member, what you receive what I just said, okay? Also the live recorded trading sessions and the market replay videos, okay? So, but the reason why I create that video content for the private community is because I go into so much great detail walking through these setups and covering the strategy and how it actually works. Now, let me talk about and share this example here from the 17th, which is right here. This is the kind of trade, the sweet opportunities that I look for, and these are the ones that I love because they work out the best. These right here, where you have a higher time frame zone. So whatever you use for your higher time frame, whether it's 120 range charts, some of you may trade time-based charts, whatever that may be for you. They're not comparable, guys. I mean, range charts and time-based charts are not in any fashion, because range charts are calculated differently than time-based charts. You have to understand that. But either way, start with whatever higher time frame zone, higher time frame you use, and find your zones. Okay, high probability zone. This is a high probability zone because it has an imbalance or gap attached to it. Now, once it pulls back to the actual zone right here, that's the supply zone, I'll move down. First, I'll mark it up because we got the breaker structure below, okay, coming lower, and it pulls back to this area right here of this area of supply. Now, I'll mark that up on my higher time frame with 120 range chart, and then I'll move down to my lower base chart, 24 range chart. So what I have here, see that yellow box there? I'm identifying what is on the inside of the higher time frame zone that I've just marked up, okay, that supply zone. I want to see where there is a lower time frame, 24 range, which is my entry chart, supply zone on the inside of the larger zone. So that's giving me multi-chart confluence there. And that's what, the more confluence I'm able to have, that's what kind of tells me, hey, this is the kind of setup I'm looking for. Plus, we're into like a low volume area here on the volume profile. Sweet area to take a trade from. Even if I was to draw up a quick volume profile just over this area, you can see when the market comes back, where is it at? It's in this low volume area right here. So the market likes to reject out of those areas, okay? Plus, this is close to the 22,050 area. So that's a third level of confluence. So basically 4 areas of confluence there. The higher time frame zone, the lower time frame zone, which is high probability, and we have the 22,050 area, and it's at a low volume area. It's a lot of confluence right there. The more confluence you have, the better the trade is going to work out. This is all surrounding smart money concepts, that style of trading, looking for areas where the banks and institutions are moving quickly away. If they're moving away real fast and they're not pulling back to close imbalances back at these areas, at some point they have to. When they do fill it back, There could be orders resting on the table that they just want to able to execute quick enough, and that's what we're looking for. The opportunity to take the trade with them once they pull back to those areas to fill the imbalance to go in the direction with them back to the downside. So hopefully that makes sense. This is the multi-chart confluence, type strategy that I like to see. Those type setups work the best. Higher time frame zone, lower time frame zone on the inside of the higher time frame, and then any other type of confluence that you may have, like a round number, a half number at that particular zone. Okay, so if you want to learn more about this particular strategy, you may want to become either an elite or an ultra elite supporter, member. Okay, now all you have to do is scroll down to the description portion of the video. Right below the Discord link, you'll see one that says Ultra Elite Supporter. You click on that, 3 tiers will come up. You want to choose either the second tier or the third tier. The second tier for $6.99, which is like 24 to 25 cents on the day. What you will receive are the trade breakdown videos, and there's tons of those videos there that you can watch one after the other as I walk you through these trade setups, talking about profit targets, stop loss areas, everything, the full rundown when it comes to structure as well. Plus, you get the market structure video in the video playlist. Now, if you want to step it up and become an Ultra Elite member, then you receive everything I just discussed, plus the live recorded trading sessions and the market recap videos for $14.99, which is like 49 to 50 cents on a day. Just think about how much money you may spend on a price of a cup of coffee, okay? All right? That adds up weekly to be what? Here's something that for either $7 or $14.99, depending on the tier you choose, that can be game changing and possibly change your life, but you have to put the time on the charts. You got to put the work in. You got to understand, how to find these type setups and what you're looking for just as well. Okay. It's not hard. It's not rocket scientist. You just got to be able to put in the time on the charts, back test it, forward testing, before you start doing anything live. Okay. That's what demo and simulation gives you, the opportunity to basically paper trade to see how well you can execute the strategy and learn it and profit from it. Okay. But outside of that, that's all I have for you guys today. Hope everyone's having a fabulous weekend. If you have not already subscribed to the channel, please do so by doing so. By clicking the link down below, okay? That subscribe button, click on it. Make sure to turn your post notifications on so that you don't miss any of the uploaded content, okay? So basically, like, share, and subscribe. Click that thumbs up button for me now if you haven't already done so. I'll see everyone in the next video. Take care and have a fabulous weekend.